Are you tired of the rainbows and butterflies approach in multifamily investing, where everything unfolds seamlessly and everybody wins? You never see behind-the-scenes reality. If you resonate with our perspective, acknowledging that true insights emerge from navigating mistakes and challenges, then you're in the right place. Join Christy Keaton, your host, as she dives into the missteps and lessons learned encountered by active apartment operators. In these episodes, we embark on a journey to dissect and analyze the pitfalls within the multifamily project lifecycle, focusing on the crucial stages of finding, funding, fixing, or flipping a project. Instead of glossing over setbacks, we shine a spotlight on them, providing a valuable learning experience for our audience. Each episode concludes not only by revealing how the issue at hand was rectified, but also by sharing other priceless lessons derived from the experience. It's an unfiltered exploration of the multifamily investment landscape, revealing the intricate tapestry of challenges and solutions that make the journey worthwhile.
Hello, and welcome back to another episode of Multifamily Missteps. I am your host, Christy Keaton, and with me today, I have the pleasure of Mr. Andrew Reichert, and he is going to walk us through his journey and add some really good value for you guys, so maybe you can miss some of these missteps. Welcome to the show, Andrew.
Hey, thanks so much for having me on.
Awesome. I'm excited about this. I have looked up your journey a little bit, and so I'm excited. So if you could just tell us a little bit about how you got started actually in the real estate business and what made you go towards the multifamily business.
Absolutely. So my path to real estate, I think, is a little atypical. I graduated from college, and the year I graduated, I actually bought a duplex. Now, my story getting to college is the part that I think makes it non-traditional. So I got expelled from high school, and then in college, somehow by some miracle, I got accepted to college and was paying my own way through college. And in college, I read the book Rich Dad, Poor Dad. And it sort of like opened my eyes to the concept of real estate and investing and business ownership. But I just didn't have any money. I had taken out a bunch of loans to pay for college, and I graduated from college in debt. So I started reading every book on no money down. Like, how can I buy money with no money down?
Yeah.
And yeah, so I ended up buying a duplex with no experience, no money, no credit. In fact, I was in debt and I walked away from closing with a check for 20 grand. So
Wow.
the things you could do
Yes,
before the great financial crisis. But yeah,
absolutely.
that's how I got into the business.
That's amazing. Yeah, a lot of people start with just that one, but a duplex. So did you live in the other side of the duplex, or did you have both of them rented out?
So at first I had lived in one of the sides and then
All right.
ended up renting them both out and living somewhere else. So
Yeah, that's
I lived
awesome.
lived there for a short period of time.
Yeah, yeah. A lot of people do what they call the little house hack, those type of thing. And I love those type of real estate deals where you're able to live in the unit and rent out the others to cover your part of that. That's awesome. So when did you start looking towards the large multifamily, and how did you get there? Was it networking? Was it just meeting somebody off the street? Really? How did you get there?
Yeah, for me it was slow and steady. So I bought the duplex, walked away from closing with a check for 20 grand,
Love
used that as
that.
a down payment for another property, fixed that up, refinanced it, ended up getting to the point where I had 8 units. And then I bought two sixplexes. So 12
Wow.
additional units, got to the point where I had 20 units. And that was really where I decided to expand beyond my own capitalization, take some investor capital in and expand a little bit further. So two 6 units and then an 11 unit and then a 14 unit and then a 20
Love
unit.
it. Wow.
So it was just kind of continue to find assets and grow a little bit bigger and brought in some additional capital to do so.
I love that. So
I was still working a corporate job for a local bank here called PNC, and then I resigned from that job in 2012, and that was when I had the 20 units and started launching out more full time into real estate.
that's amazing. 2007. So since 2007, I bet there's somewhere along the way you had a misstep or two that you can tell it to us about. Was it financing? Was it attorney? Was it insurance? What was your misstep? Renovation? What was your major misstep that it's so drilled into your mind now that you'll never do it again?
Well, honestly, there are so many missteps I've made along the way. It's hard to pick just one. In part just because I didn't really have anybody teaching me what to do. I just really was figuring it out on my own. So
Right.
I'm doing all my own property management, all my own leasing, all my own maintenance. I'm watching YouTube videos to learn how to replace a thermocouple on a furnace, and then I'm showing apartments at the same time. So
Wow.
I just did so much wrong. It's hard to pick one thing. But since then, just to provide some context, today we raise private equity real estate funds. So we've raised $100
Okay.
million across 4 funds, and we've purchased 3,600 units with that capital.
Wow,
Um,
that's amazing. That's awesome.
yeah.
Congratulations
Yes.
on that.
Oh, thank you. I appreciate that. But if I really put on my hat that says, hey, what's the main misstep that we've made along the way? It's always in the acquisition. Sure, we've made mistakes in the operations. Some of the things I've said, like, hey, maybe we should have done a better job of leasing or the
Yeah.
better job of cutting the expenses. But what I found is that the underwriting and the due diligence are the most important aspects of acquiring multifamily real estate. And just if you get some stuff wrong, it has such a profound impact.
You are right.
So for me, it was, hey, we missed something huge in the physical due diligence of a property. I can remember one where it had a huge structural issue, big foundation issue, and we just missed it. And just that one issue alone totally wiped out the return on investment from that asset. Um,
Wow.
or we just got the underwriting wrong. We thought that we'd be able to increase rents to X and we couldn't. And so it's those underwriting and due diligence items that I've found to be the biggest missteps.
Yeah, yeah, I'm with you. You touched my heart a little bit because I'm underwriting expert and I love the numbers. And some of my brokers are like, "Are you going to send us an offer or what?" And I'm like, "Look, I feel like I've missed something because this deal looks way too good." So I so feel the pain of the underwriting process, right? And I have some other partners that they missed insurance in Texas. We weren't expecting it to hit that high. Taxes in Texas, we weren't expecting it to hit that high, right? So yeah, you have to be more on the conservative and maybe even overly conservative, especially when you mentioned the rents that you can achieve, especially in those type situations. How did you overcome that situation? Like, I can see how you overcome the structural. You basically have to take your renovation money and fix that problem that you missed on due diligence, right? We've had to do that with some plumbing issues as well. But on the rents that you weren't able to achieve because of that, and how did you overcome that? And what was the end result for that particular one?
Yeah. The way I like to think of it is you make your money when you buy, not when you sell. You realize the money when you sell, but you make your money when you buy. And
Right.
so we operate under a fund structure. So any particular fund will have 20 to 25 assets in the fund. And what ends up happening is those particular assets where we got it wrong, we don't recover. There is no recovery.
Mm,
Like you take an L on that property. But
yeah.
fortunately for
Yeah.
us, in any given fund, we'll have some huge home runs that we didn't expect to be as good as they actually are. So
Right.
the net returns to our investors over our 4 funds have been about 16% net
Okay.
IRR. And we're really happy with that. So like some of
Yeah.
our assets will be 35, 40% IRR. Some will be the ones that go really, really poorly are like 5 or 6% IRR because we've never seen a zero or a negative IRR. And the reality is a lot has to go wrong for that to happen in our
Yeah.
business,
Yeah.
but it averages out to be something strong. And so we take our lumps and our losses where we made bad decisions on underwriting, and hopefully the opposite ends up being true as well, where we end up having some real home runs.
Yeah. That's good. Like, it's really hard to overcome something like that. So you were talking about it being in a fund. Can you explain to the listeners, because I do have some pretty new listeners as well. Can you explain to the listeners what a fund is and how a fund can help overcome that type of situation?
Yeah, a fund is basically, you could think of it as a almost like a stock that you'd be trading in the stock market. In our case, the stock market would be public, whereas in our case it's private. And so it's an entity that investors can invest in. And we take that entity and we go out and we buy real estate. And it has a share price associated with it, just like a stock that would be publicly traded. So for
Okay.
us, it's we put together the fund, we raise the capital, and we go out and we buy multifamily real estate. And it doesn't necessarily help to mitigate the risk of real estate investing, but most people get into real estate investing by investing in a syndication. So they're investing in one particular asset,
Right.
whereas a fund, it just gives you a little bit of diverse, more diverse pool of assets. And that allows you to have a bit more of a stable stream of income and also expected outcome.
I love that. I love that. Thank you for that explanation. I love that you were talking about some of them will get the 35% IRR and then others will get the 16. Do you have any that have gone lower than the 16?
Yeah, that's what I was saying. Like some of the real losses will be 5 or
Yep.
6%
Okay.
IRR.
Yeah.
We haven't had any that have gone 0 or negative, but single digits is common for the real dogs in a portfolio.
Yeah, for sure. For sure. Okay. So is apartments all that you put your fund in, or are there other multifamily like storage units considered multifamily, those type of things? Or are there other assets that you put your fund in?
Today we're squarely focused on apartments. We acquire
Okay.
apartments between 50 to 150 units in our target markets, and really
That's a
that's all we do.
That's a good number. That's a good number because a lot of the larger institutions are not looking for the 100 to 150. They're looking for larger. So that's great. Okay, so what is next for Andrew? What's coming up next in this space, and what else do you have going on?
Yeah, as it relates to our real estate company, we're trying to get to 1 billion of assets under management. So we're currently at 350 million. So we're just always raising capital and acquiring assets. We're trying to 3x our company in the next 6 years, trying to get to 1 billion by the end of 2030. That's really where we're at now.
I love that.
A personal standpoint, I've developed a little bit of an operating system for life that I've got a book coming out in the fall and excited to share that with the team and with my family. And we're starting to really market this operating system we put together as a company as well.
I love that. That's amazing, and I'm going to be watching for it. I'm going to be watching for it to come out. So this fall, like within the next few months.
Yeah.
Awesome, awesome. So will we be able to find that on Amazon once it comes out?
Yeah. In fact, you'll be able to go to rosjourney.com.
Okay.
ROS is Rhino Operating System. That's what we call it. And you'll be able to get the book there. And we're developing an app and putting a whole system together.
That's amazing. That's amazing. Okay, so I like to ask a few questions here at the end. One of them being, tell us who inspires you the most or who has inspired you the most to continue your journey.
Yeah. When you say continued journey, you're talking about real estate investing
Mhm.
or?
Yep, your real estate investing journey.
Okay. There's a ton of people that I could mention here along the way, but I mentioned that the book Rich Dad Poor Dad was one of the books that really changed my life. And
Eye opener.
from my standpoint, it was the philosophy, really understanding that I had like this poor dad mentality and
Mhm.
that I needed this rich dad mentality, that I had to change my mindset. So I would say like that book has been one of the key pivotal catalytic moments in my life. So I guess I would say Robert Kiyosaki, the author of that
Right.
book, has been something that's really inspired me.
Yeah, and he's still very much around and very much in the investment business. So he's still out there telling us good things and showing us the way. So that's great. I love that. Is there anybody in your family that inspires you to keep going?
Yeah, for me, my 3 daughters are really, like, what wake me up every day. I love being a girl dad, and I love
Yes.
serving them, doing daddy-daughter dates with them. I've got an amazing wife as well, who's a great partner in crime. She was our first employee at the company, so we've worked together for 10 years now.
That's amazing. I love that. Number one, that is a family business. And number two, you're a girl dad. How amazing is that? I love
Very
that.
true.
I love
Yep.
it, love it, love it. So, okay. So I like to promote other podcasts and authors. So what podcast would you recommend besides this one? And it doesn't have to be real estate. It can be any podcast.
Okay. Well, a podcast I've been listening to a lot recently is the Founders Podcast. It goes through stories of other founders, and I just like hearing stories of the start and the hustle and the grind of starting businesses. I guess I'd be remiss if I didn't mention our podcast as well. Not to throw a shameless plug out there, but we do have a
Please
podcast
throw it.
called we have a podcast called Real Returns that we host, and we talk about the impact of investing. And so that's been a lot of fun to do with my business partner Dan, and we love interviewing people and talking about investing and the impact that it can have.
Yes, yes, I love your podcast. So, okay, so now a book that you would recommend, and it doesn't have to necessarily be a multifamily book, but any book that keeps you going, keeps you inspired. Like, what's the best book that you got?
Oh, that's an impossible question. I probably read 3, 4 books a month. So,
Yes.
to pick one is definitely not possible. But I think if I were just going to pick one of a book that I've read recently,
Recently, yeah.
what's interesting is I actually don't read about real estate or investing all that much. One of my passions is health and fitness. So
Okay.
I had cancer 10 years ago.
Mm,
And so we
you
were
beat it.
newlyweds. I had just got married. They told us we might not be able to have kids. So it was very much a hard thing for us to go through. But yeah, very blessed and grateful today to have beaten that situation. And so a book I just read is called Outlive that I really enjoy. Peter Tia does a great job of talking through the science of longevity. And so I've just found myself to be a student of like health and fitness and in particular longevity.
I love that. Congratulations on beating that devil is what I call it.
Thank
That's
you.
all it is to me is like the devil cancer. Just yeah. And for to hear you say that you beat it and now looking what you said 10 years later and you've still got your beautiful wife and now 3 baby girls. I'm almost in tears in a minute. I'll be emotional
Oh,
in a minute. That's amazing.
yeah.
And you just blessed my heart on that one.
Thank you.
Um, Andrew, it has been goodness. It's been a pleasure to have you on today. It's been a pleasure to hear your journey, and you have added value, especially in the underwriting portion of it. And I'm hoping that some of my listeners will be able to get this value and take it and not have that misstep that you did. So thank you so much for being here. And if there's anything that we can do going forward, I'm open and I appreciate it so much.
Well, thank you so much. Great to be on the show. Thanks,
Yeah.
Christy, for all that you do.
Yes. Thank you so much for listening, and we'll catch you next time. See you later.
Thank you for listening to another episode of Multifamily Missteps. Your dedication to our podcast is truly appreciated. Please help us spread the word and make our community even stronger. The valuable lessons that our guests bring each episode will help you and others avoid these missteps along your journey. Hit the subscribe button, take a screenshot of the episode you just listened to, post it on your social media, and tag myself and my friend Jerome Myers. You never know, you might find yourself our next featured guest. I cannot wait to continue this journey with you. Until next week, stay tuned and stay inspired.